I am showing we are right at 12 Central, so I'll go ahead and kick things off. Good afternoon and welcome. Thanks for joining us for this session in the 2025 Yellowbook training series. For those of you who may not know me, I am Rachel Windett with Sikich University, and I'll be on to support you all today. We're also joined by Rachel Hawley, and she'll be screening questions and comments coming in. Materials are attached, so take a moment and download those if you'd like to follow along as we go through the presentation today. For CPE, we will have 3 polls. As they come up during the session, please take a moment to complete those polls because all 3 are required for CPE in attendance. If you're joining via your browser, please make sure that you are set to full screen, as some of the polls can be hidden if your window is minimized. For CPE, you can expect that certificate within 5 to 10 business days at the most. That will come from the sender certificates@conferences.io. So I say that because a lot of the time that gets hung up in spam, so make sure you keep an eye on that as well. This recording will be made available on demand in a few days. You'll get an email with that information. So for this session, we welcome back Steve Randall and Melanie Mui. Steve is a principal here with us, and he is also the firm's risk advisor practice leader. With 30 plus years of management and consulting experience, he specializes in project management, operational efficiency, and conflict resolution. A little fun fact about Steve is he coached baseball for over a decade and was the president of Youth Baseball League in Chicago, which eventually led for him to throw the first pitch at Wrigley Field. So he is joined by Melanie. She is a director of internal audit services with our governance, risk, and compliance practices. She also leads the internal controls assessment practice. Melanie is a certified CIA CFE professional with over 20 years of experience. She has worked with a variety of industries, including government, manufacturing, energy, and NFP, specializing in internal controls, to name a few. So in the name of fun facts, a fun fact about Melanie is that she has been a CrossFit coach for over 7 years. She is also the first name on my list to call when I need furniture moved. Just kidding. Thank you again for everyone for joining us. I'll hand it over to Steve and Melanie.
Thank you. I didn't realize we're getting into fun facts today. First slide is a slide that our legal department asks us to include. It essentially says that we're not rendering legal or professional advice, and if you take action because of what you hear here today, which you probably should, but if you do, you can't hold Sikich accountable. As Rachel said, I'm Steve Randall. I'm a principal with the firm leading the corporate governance, risk management, and compliance practice. She alluded I live in Chicago. I've been with the firm for a little more than 2.5 years, and if you've got little kids, you know the half year is very important. I'm assuming most of you are familiar with Sikich. If you're not, please check us out online or connect with me. The practice I lead includes a lot of internal controls consulting, internal audit, IT audit, compliance assessments, and risk assessments, just to name a few. This work allows me to work with very talented people like Melanie while serving and advising phenomenal organizations and the people they employ like you. If you have your phone handy, the QR code in the upper right-hand corner takes you to my LinkedIn profile. Please feel free to connect with me if you're interested. I'd love to connect with you. Sikich provides a platform to spread the word about the importance of internal controls and risk management and the role internal control evaluation plays or could play in organizations. I've been doing this for a really long time and look forward to sharing my experiences and hopefully participate in a conversation if there's questions that pop up. Q&A will be open throughout the presentation. We'll try to get to as many questions as we can, and those we can't get to, we will answer after the session. Now, Melanie.
Hi, everyone. It's great to be here with all of you today. My name is Melanie Mui, and I'm a director here within the Sikich GRC internal audit practice. I've been with the firm for over 2 years now. And before I forget, feel free to scan my QR code to connect with me on LinkedIn. I was born and raised here in Chicago. I started my career many years ago at Deloitte, where I specialized in government and not-for-profit. My main clients were the City of Chicago and Catholic Charities, and I later went on to work for the Chicago Inspector General's office for several years. So for the past 20 plus years, I focused on internal controls, risk management, and internal audit in the government, not-for-profit, and manufacturing sectors. I currently lead the internal controls assessments practice here at Sikich. So I'll turn it back over to Steve to kick things off.
All right, so let's get on to the show. We're talking about the importance of an effective system of internal controls, an area often overlooked and sometimes an afterthought, and how internal controls can safeguard your organization from fraud and or mismanagement, thereby providing assurance to your stakeholders. It may not be the most glamorous of topics, but it got you here. So I assume you have an understanding of internal controls importance. Melanie and I will do our best to share some of our knowledge in the most interesting and lighthearted way possible. Looking at the title, unless you've been a victim of fraud, you might be thinking preventing fraud and mismanagement is a bit dramatic, maybe a bit critical, a little pessimistic, or just a stretch. If that's what you're thinking, I'm going to do my best to change your perspective. This presentation is really about risk management, specifically operational and financial risk management, and the importance of internal controls. On the following pages, we're going to discuss what can go wrong in the absence of strong internal controls. We're going to introduce what all of our collective roles, all of us on this call, what our roles are in designing internal controls and our responsibility to verify their effectiveness. Ideally, I want you to approach your operations with professional skepticism. In fact, there's a famous quote from 45 years ago that applies. And if you're of my generation, you may recognize this quote from Ronald Reagan. Well, at the time he was talking about dealing with the responsibilities as president and managing the relationships with our adversaries, he could have just as easily been talking about risk management and internal control effectiveness. So what does this mean? I ask you to think about it in this way. Information is constantly flowing in and out of your organization, and almost everything we do involves or requires information. And you or your colleagues are handling and processing that information on a continual basis. Also, money, whether it's grants, taxes, donations, dues, enrollment fees, and other sources of funding and or payments, is constantly flowing in and out of your organization as well. The movement of money is a critical aspect of our daily professional lives. You or your colleagues are processing and accounting for those funds on a regular basis. So the question I want you to consider is, what are you doing to protect and secure the flow of information and the flow of funds? What are the largest transaction you process? How do you make sure they're recorded properly? Are you dealing with cash? How do you make sure it's accounted for properly? Are you making payments? How do you make sure they're getting routed to the appropriate party? Are you receiving sensitive data? How are you securing it? It's important that you have a documented process for doing each of these things. A documented process makes it repeatable and controllable. However, if your answer is Jim does it, he's always done it, I'm not sure what he does, but he always gets it done, this answer, unfortunately, is not out of the ordinary. And if it applies to your organization, you really should reconsider your procedures and get them documented. While it may not seem glamorous, if you spend some time considering what I call organizational defense mechanisms, internal controls, you'll create a strategic seal that protects you and your organization. So here's the agenda for today. Why everyone is essential to governance. And by governance, this is not referring to governing as in government. This is corporate governance, as in the system by which your organization is controlled and operates, and the mechanisms by which it and its people are held accountable. We're going to talk about the importance of risk management strategy. We're going to talk about internal controls and monitoring and essential internal controls. We'll talk about protecting information technology and sensitive data. And then we'll follow that with ongoing management, monitoring your internal controls. We're going to do all that in the remaining 50 minutes or so that are left. Throughout the presentation, you're going to be asked to respond to polling questions. There'll be 3 of them. I'll do my best to announce when they're coming. Your answer to these questions will be a requirement for your CPE credit. And with that, one is about to pop up on your screen.
Okay, so you should see that on your end. How concerned are you about the impact of a breach, a fraud, a compliance violation, or other risk to your organization? So I'll give you a bit to reply. As Steve had said, this poll is required for CPE credit.
It's fun watching these answers come in. It's like a living creature moving and evolving. Most people here have a concern. Are they seeing these results in real time? Where we're looking at over 50% so far, either extremely or moderately concerned. And the way the questions, there you go.
Yep.
The way the questions ask, it's about the impact of a breach, not whether or not a breach is going to happen. So that's curious. For those of you that are not concerned, we should ask that same question at the end, and we'll see if it's the same answer. Thank you for participating. So finally, on to a topic, agenda topic number 1. Melanie, I think you're going to be okay if I take this. I take the nod as a yes. Leadership, whether it's elected, hired, contracted, or volunteer, sets the tone for your organization and is expected to promote and foster an ethical and responsible culture. Most of you will understand this as tone at the top. Leadership not only has to set the tone by what they say, they have to reinforce the tone by what they do. And there are numerous stories about a leader losing his or her job because they crossed an integrity boundary. They're not willing or they're not able to walk the talk. And while it starts at the top, governance is a responsibility that should be shared throughout your organization. For example, the head of accounting and finance sets the governance for accounting and financial reporting, playing a crucial role in identifying and managing financial risks. They're responsible for establishing robust financial controls and systems to safeguard assets and mitigate the risk of financial mismanagement or fraud. Employees also play a critical role in effective governance in several important ways: by adhering to high ethical standards, by complying with internal policies and procedures and external regulations. They also have a responsibility for and hopefully access to channel for reporting misconduct and or unethical behavior. They should avoid situations that pose an obvious conflict of interest. They have a significant role in shaping the culture and ethical tone, and they influence stakeholder relationships through their professionalism, responsiveness, and commitment to service. All of this to say, the actions and behavior of everyone collectively influence governance practices and your ability to build trust with stakeholders. The governance expectations should be documented, understood, and shared across your organization. It's everyone's responsibility. We need to ensure responsible and ethical behavior. We need to implement appropriate systems and procedures to mitigate risk. We need to ensure the integrity of internal controls, the security and availability of technology and information systems, and the accuracy of financial reporting. We need to ensure disclosures and procedures are compliant with all relevant laws and regulations. We need to ensure compliance with all applicable legal and regulatory requirements. We need to ensure the principal operating risks are identified and managed. A breakdown in any one of these could spell doom for your organization. So let's take care of our governance responsibilities so that when your organization makes the news, it's because the good deeds you do and the mission you serve and the value you create. But if we're only that easy, sometimes it may seem like you're Sisyphus pushing a boulder up a never-ending hill. You can have the greatest ideas and the biggest ambitions, but if you don't have access to the resources, it's nearly impossible to execute. And if you, like most places I've worked for or worked with, resources are not unlimited. You likely can't allocate adequate funds to instantly make your vision a reality. People and organizations, specifically the nefarious ones, are constantly trying to bring you down and distract you from your mission. You're likely relying on dated technology, resulting in an overly manual process. And now with AI in play, you have a whole list of new worries. And as far as internal controls go, you're probably great at rallying around a problem. But too many times a problem could have been or should have been avoided if someone would have just done the right thing at the right time. Because we're not in the firefighting business. Unless, of course, you are. There may be a few of us out there that actually are in the firefighting business. But if you're not, putting out little fires everywhere or one big fire distracts you from your mission. And conducting triage and operations is time-consuming, wasting valuable resources that could be used to support your mission and objectives. Even with these challenges, and maybe because of them, your role in governance is critical. If you don't, the result could be horrendous. You can't afford a 6- or 7-figure wire fraud. Significant wire fraud schemes started hitting the news a little over a decade ago, but they're happening every day today. You can't afford a security breach. Attackers are out there 24/7, and it isn't a matter of, if you're targeted, it's a matter of when. We all know that. And you better have good backup and recovery capabilities because you can't afford to be held hostage by ransomware. If you're storing confidential data, you can't afford a leak. You can't afford to be shut down because of a disaster or accident. You can't afford the loss of resources or funds due to mistakes, theft, or fraud. And you certainly can't afford accounting errors to impact your funding sources or your regulatory responsibilities. Villains are out there trying to undermine your stability. They're dressed in normal clothes doing normal things until they're not. What's showing on the screen are recent headlines I pulled from Google. These are impacted government entities, mainly government entities of all shapes and sizes. Some may look similar to yours. Hopefully none are yours. Unfortunately, these are not the only examples. This slide could have gone on for a very long time, but for the sake of time, I limited the list. And as you can see, some of these listed are cyber attacks and data breaches. Numerous studies and our personal experience show that human error is behind most data breaches. A malicious actor may instigate, but it's human error that opens the door. And it's not limited to cyber attacks. Many problems we find are not fraud or subversive behavior, just due to human error. But since this slide is mostly about fraud, I'm going to pull out some additional information that you may find interesting. This is from the Association of Certified Fraud Examiners and their 2024 report to the nations. The ACFE is a separate independent party with no affiliation to Sikich. It's a member organization. Many of us are members. Melanie is a member. She's a certified fraud examiner. I share this information as an independent, unbiased data point. The report to the nations shows facts and figures from biannual studies on fraud. What this image shows, as you're looking at it, of all the frauds examined in their samples, 17% were from government entities. I know most of you are with a government entity, not all of them. Some of you are with universities and other organizations. But specific to government entities, the median loss of all of those frauds was $150,000. But the average loss was $2.3 million. So you can see, just by the mental math, there are some massive, massive frauds out there that raise the average, but the median is 150,000. This should serve as a data point that indicates no organization is immune to the risk, and ignoring this risk obviously could be catastrophic. Sticking with the report to the nations, and for the fraud that specifically impacts government entities, 47% of it was at the national level, 29% at the state level, and 23% at the local level. So you can see every organization is susceptible. You might be thinking that, Steve, I work for a small municipality or a small organization. It couldn't happen to us. Well, guess what? 21% of frauds happen with organizations with less than 100 employees, with a median dollar loss of $141,000. This chart breaks down by organization size, so you can give it a chance to look at it. By the way, this information is free from the ACFE website. As you're looking at this, you may be thinking, Steve, my teams work together for a long, long time. It can't happen to us. Well, guess what? They've got some more data for you. More than half of all perpetrators work for their organization for at least 6 years. See by the red little red box in the corner, it's that employee who does everything for you and has worked for you for a long time and is trusted. It can happen anywhere by anyone. It's good to trust. It's a building block of a solid relationship, but it doesn't absolve you of the responsibility to periodically verify. All right, so this is another informative graphic from the study. Fraud falls into 3 primary buckets: corruption, asset misappropriation, and financial statement fraud. Most importantly, it shows the massive number of fraud schemes that exist. And if you look at the quantity of fraud per fraud cases per category, you'll see that asset misappropriation happens most frequently, but it's often combined with multiple schemes. %82% of the organizations that have been impacted by fraud modified their internal controls afterwards, their defense mechanisms. Interestingly, 95% thought their new internal controls were effective. So here's the question: why wait until there's a fraud? And it's not just fraud. The last few slides discuss fraud, but I already talked about mistakes, unintentional errors. Internal controls can prevent or at minimum detect when mistakes happen. So why wait until it's too late to implement a better defense? On page 6 of the report, and I believe this is the last reference to the report, the emphasis is on how you can make an impact. One of the primary strategies is sell the idea of fraud prevention to your management team. This is one way to garner leadership support in developing an effective system of internal controls. While we're still on the topic of governance, and governance is more than just looking out for the fraud monsters. As we know, people make mistakes. In the term of financial reporting, you probably know the words anyway, of significant deficiency or material weakness. In a world where trust and reliability are crucial for ensuring stakeholder confidence, what are you doing to protect that trust? When everything is seemingly running smoothly, it can be hard to consider and plan for when things go wrong, but bad things can happen anytime, anywhere. As I mentioned earlier, most of the problems we observe are not perpetrated by someone acting maliciously. On the contrary, it's a good employee, a loyal employee, a faithful employee, someone trying to do the right thing for their organization, but they just make a mistake. Sometimes it's minor, sometimes it's large, but it's just a mistake. Everyone makes them. The busier we get, the more stress we're under, the more likely we are to make them. So we need to have these mechanisms in place to stop these errors, what I referred to as defense mechanisms. And we need to independently review these mechanisms to make sure they're effective. So let's put a bow on governance. Similar to a lot of things in life, it starts as us as individuals. Obviously, when working in the government sector, there's a significant amount of responsibility. As I mentioned, no one wants to end up in the news. All of you are held to the highest ethical standards. For governance and enterprise risk management strategies to work, you as individuals must be a part of that. Otherwise, they won't be effective. Earlier, I said I would alert you of the polling questions. Well, another one's coming up. So if you've toggled away from the screen, toggle back. And here we go.
Okay. How confident are you in your internal control environment? So again, for CPE, make sure you complete this one. I'll give everyone another 10 seconds or so to reply. But right now, we're looking slightly confident. Looks like slightly confident is our majority, but we do have some who are extremely concerned.
Well, goal at the end of this presentation is to take you up, whatever level you're in, to take you up just another level, just level up one. The next time, maybe level up another one. So, Melanie, over to you. This is where we level up.
All right. Thanks, Steve. So risk management is essential because it helps organizations and individuals anticipate, understand, and mitigate potential issues that could harm their objectives, finances, reputation, and even operations. All organizations, no matter the size or industry, should have risk management strategies. Some are informal and some are more developed than others. Risk management is crucial in preventing losses and reducing costs, enhancing decision-making, and ensuring legal compliance. Ultimately, it builds a foundation for long-term stability, performance, and success by proactively addressing uncertainties before they become critical issues. Okay, so the next slide, please. It's stuck. Okay.
No, it's just hard to drive when you have fat fingers. Sorry.
All right, so as we go through this today, the questions we want you to be thinking about are, what are your risk management strategies? I'll be specifically talking about these 4 strategies today. If your organization does not have formal risk management strategies, the chances of fraud or inability to react appropriately to risks in a timely manner increase significantly. If your organization does have a formal risk management strategy, then you improve your chances to identify and address risks. And not only if those strategies can identify and mitigate risks, but are those strategies designed and operating effectively? If your risk assessment is solely based on a feeling or based on your trust in the individuals performing the tasks, there are plenty of stories where that trust has broken or even failed. So you may want to consider testing those strategies to ensure they are appropriate and operating as intended. If you don't have any form of risk management strategies, what can happen? Fraud. Steve showed the slide of various headlines of real-life frauds that have recently taken place. Frauds happen at both large and small organizations. If you do have formal risk management strategies, that's great. You're effectively improving your chances of identifying risks to your organization. And when you identify those risks, you can better effectively mitigate them. So the 3 lines of defense model is the first one we're talking about here, and it facilitates strong governance and risk management where all the roles within the 3 lines are working together collectively to contribute to the creation and protection of value, which is a win-win for everyone. Depending on the size, complexity, and staffing of your organization, you may have stronger first lines of defense and less so on the second and third lines. Or perhaps in smaller organizations, the first and second lines are performed by people wearing multiple hats with multiple responsibilities, and there is very little difference between the first and second lines. As you can see on the slide, the first line manages the day-to-day operations. It also designs and implements the internal controls. Segregation of duties is the most important control to have in place, especially in the first line. This means you shouldn't have one person having too much opportunity and authority, allowing them to perpetrate a fraud. The more you're able to segregate duties, the more it allows for better protection of the organization. The second line provides expertise and support, such as risk oversight and compliance, as well as monitoring and reporting. Identifying, understanding, and then applying a mitigation strategy are extremely important. If you're not in the process of identifying risks, you won't be able to determine how to remediate issues or apply a risk mitigation strategy to them. And lastly, the third line. It's independent from management and promotes and facilitates continuous improvement, such as evaluating controls, risk management effectiveness, and continuous monitoring. Now, structured risk assessment and monitoring involves a systematic, repeatable, and documented approach to identifying, analyzing, evaluating, and continuously overseeing organizational risks. By standardizing risk management, organizations can make more informed decisions, ensure compliance, and protect their assets, reputation, and operations from potential threats. The key phases of the process include risk identification, which systematically recognizes potential risks by reviewing business functions, technological changes, legal obligations, and external factors. Risk analysis determines the nature and potential consequences of the identified risks. This involves assessing the likelihood of a risk occurring and its potential impact on the organization. Risk evaluation and treatment compares the analyzed risks against pre-established criteria so that you can prioritize them. Then you can decide on an appropriate response strategy of either avoid, mitigate, transfer, or accept. Risk control implementation puts risk treatment strategies into action by establishing internal controls, security measures, policies, and contingency plans. For example, a risk of data breaches might lead to implementing multi-factor authentication. And then continuous monitoring regularly tracks and oversees the entire process, as risk management is not a one-time event. Government agencies are shifting from siloed, reactive approaches to integrated risk management, or IRM. This is a business strategy for identifying, assessing, and managing an organization's potential risks across all departments, moving beyond traditional compartmentalized approaches to a unified enterprise-wide framework. IRM involves engaging stakeholders across departments, using real-time data and predictive analytics to anticipate disruptions, aligning risk management with strategic planning, and recognizing risk as both a threat and an opportunity to build public trust. By integrating risk management practices, organizations gain a connected view of risks and controls, enabling better informed decision-making, improved efficiency, and greater resilience in the face of diverse risks like financial, operational, strategic, and cyber threats. Lastly, technology-driven risk mitigation leverages advanced technologies. AI, machine learning, and automation are used to more effectively and efficiently identify, analyze, and mitigate potential organizational risks compared to traditional methods. It enhances predictive modeling, real-time monitoring, and automated data analysis to proactively address threats like security breaches, data loss, system failures, and compliance violations, ultimately improving operational integrity and safeguarding assets. Public sector organizations are embracing cloud-based services and zero trust architectures to enhance cybersecurity and data governance, automate processes to minimize fraud and human error, and strengthen resilience through digital transformation. Okay, so internal controls monitoring. Now, we're going to talk about internal controls and what they are. So the Institute of Internal Auditors is the governing body for the internal audit profession. They set the standards all internal auditors should conform to. Their definition of a control states, a control is any action taken by management, the board, and other parties to manage risk and increase the likelihood that established objectives and goals will be achieved. Internal controls are basically policies and procedures implemented by an organization to ensure their financial reports are reliable, operations are efficient, and activities are compliant with applicable laws and regulations. Internal controls are essential to good governance. They should be documented in procedures, understood by your employees, and reviewed by management and leadership. Also, they should be tested to ensure they are effective. Now, circling back to the third line of defense, this is internal audit's role. We find this to be the most neglected line of defense for government agencies. The third line of defense is independent assurance, and it establishes accountability within the organization. It is important that individuals know someone will be monitoring to ensure that things are done appropriately. When we perform internal audits, or when we are the internal audit function for organizations, we conduct risk assessments. We look at the design of internal controls and test the operating effectiveness of those controls. We don't just rely that controls have been implemented and that the control owners are performing them. We trust but verify through testing. Unfortunately, most smaller organizations do not have a third line of defense, and they can benefit greatly from doing periodic internal controls assessments like we do here at Sikich for our clients. We have performed these for several organizations where we go in, we review controls over a wide range of processes, and give our assessment related to the internal controls designs and whether they're operating as intended. We also identify control gaps, weaknesses, efficiencies, and redundancies. This gives some assurance to the leadership team and again, establishes accountability within the organization. If you don't have a third line of defense, how do you really know that what you've designed is truly functioning properly? And if there were changes in people, processes, and/or technology, what happens to the design of the controls? Again, there's a potential risk that controls may not be working. And if no one is monitoring, you may not know until it's too late. Many people assume that the annual financial statement audit will identify all control issues. However, I want to talk a bit more about what external does and does not do. There's a big difference between what internal auditors and external to auditors do. So external audit's objective is to provide an independent assessment of financial statements for accuracy and compliance with regulations. They focus on financial statements to ensure compliance with accounting standards, regulatory compliance to verify adherence to legal and tax regulations, fraud detection to assess risks as they relate to the financial statements, and stakeholder assurance to provide assurance to investors, creditors, and regulators. Again, external auditors focus on financial accuracy and compliance for external reporting, while internal auditors focus on risk management and operational improvements within the organization. The external auditors do not evaluate business processes for effectiveness, identify and mitigate internal risks, ensure adherence to organizational policies, or monitor and prevent fraud internally. When external auditors test internal controls, they're doing so to issue an opinion on the financial statements. In other words, are the financial statements reliable? They are not completing in-depth internal control testing to identify fraud. So now I'll turn it back to Steve to talk more about internal controls and internal audit.
Thanks, Melanie. So why are internal controls needed? Melanie just went through a whole list of things. It's to make sure things are happening as intended. As I said earlier, Melanie and I are both sitting in Illinois. I actually live down the street from DePaul University. One of the accounting professors at DePaul is Kelly Richmond Pope. If you've heard me speak before, you've heard me mention this. Kelly produced a documentary called All the Queen's Horses. You may have heard of it. If you haven't, look it up. It's called All the Queen's Horses. It's a story of a small town of Dixon, Illinois, which also happens to be Ronald Reagan's birthplace, you know, the trust but verify guy. Anyway, Dixon was the victim of a largest municipal fraud in U.S. history. The person who perpetrated the fraud was a long-standing and trusted employee, which is consistent with the statistics I showed earlier from the ACFE. Her fraud was found out by accident when she was away from the office. Also, December of last year, the perpetrator had her sentence commuted 5 years earlier than what the original sentence was. If you watch the documentary or you know the story, you'll be as shocked as I was when the sentence was commuted. Again, it's All the Queen's Horses for those of you who are interested. So far, we've explained the importance of governance and the responsibility that is shared across your organization. We've showed some scary things can happen in the absence of internal controls. Melanie's talked about the three lines of defense of risk management and introduced the importance of testing and internal controls. I thought it'd be important to talk a little bit more about internal audit. Many large organizations have made the investment into the internal audit function, whether they've hired it internally or outsourced to a firm like Sikich. Internal audit, which is very different from external audit, as Melanie said, is sole responsibility is to independently and objectively evaluate internal controls and other risk management governance processes. Internal auditors can get quite granular into all areas of financial reporting, operational processes, compliance, and IT. Internal audit is the third line of defense for the organizations that have it. My assumption is most of you do not have an internal audit function. And in that case, like Melanie said, it becomes blurry. I ask you, though, to take a minute to think about your organization. What do you think your top risk is? How much time or money or resources do you invest in mitigating that risk? Has anyone ever independently evaluated the risk mitigation procedures? It doesn't have to be an external party. It can be someone internally, but has anybody ever evaluated your procedures? If not, why not? Remember, trust but verify. Verify doesn't demonstrate distrust in management. It demonstrates to your stakeholders that you take the responsibility for safeguarding your mission seriously. Okay, with that, here's your warning for another polling question. It is forthcoming.
Okay, so how important is it to have an independent assessment of your internal controlled environment? I'll give you all a moment to reply, but it's looking extremely important.
We may have biased the answers with the presentation so far.
We're leveling up.
Level up.
All right. So we've closed that, and majority feel it's extremely important.
Yeah, so for the 89% of you that think it's important, hopefully you have you've done that or will be doing that soon. Okay, so now we're going to share some examples of internal controls. Oftentimes, as I've mentioned before, we get a call by a client after something goes awry so that we can assist with triage, essentially picking up the pieces after something bad happens and figuring out root causes. Other times we're asked to proactively help so that things don't break in the first place. So I'm going to turn it over to Melanie to go over some essential internal controls.
Okay, thanks, Steve. So here's a list of essential controls that no organization should do without. So the first is segregation of duty, which divides responsibility among different individuals. This prevents any single individual from having too much power, which could potentially lead to errors, fraud, or abuse. The key areas to focus on are authorization, custody, and record keeping. For example, one person might be responsible for initiating a transaction, another for approving it, and a third for reconciling the accounts. It provides clear role definitions that enhance traceability of actions, as well as encourages ethical behavior and compliance with regulations. Authorization and approval controls ensure that all transactions are properly reviewed and approved. These controls prevent unauthorized access, fraud, and errors, safeguard assets, create auditable records, and streamline workflows. They also provide numerous benefits by enhancing security, improving operational efficiency and financial accuracy, and establishing accountability within an organization. Access controls restrict access to systems, data, and physical assets, which include password policies and role-based access. This helps in reducing the risk of data breaches, theft, and other security incidents. In small IT departments, you can have a lot of responsibilities spread across very few individuals, or some of those individuals may have what's called privileged user access, essentially giving them complete control. If the system does not have an audit trail, they could make any changes within a system without anyone noticing. Additionally, you'll want to review user access on a periodic basis to ensure access is removed for employees no longer requiring it. Account reconciliations and review help in detecting and preventing fraud and ensuring financial accuracy and transparency. Be sure to regularly perform account reconciliations and reviews of financial reports. Okay, moving on. Audit trails maintain detailed records of transactions and system activity. Audit trails benefit organizations by enhancing security and accountability through detailed activity logs, which deter fraud and help investigate security breaches. They provide transparency and enable regulatory compliance. Furthermore, they improve data integrity and support audits by allowing for event reconstruction, troubleshooting, and the identification of operational inefficiencies. Monitoring and oversight controls provide benefits including fraud and threat prevention, real-time risk management, improved operational efficiency, and reduced costs associated with audits and operational errors. They achieve this by enabling early detection of issues, providing continuous visibility into operations, safeguarding sensitive data, and ensuring that systems and processes remain aligned with organizational goals. Conducting risk assessments in the government sector offers benefits like improved decision-making, enhanced public trust for transparency, increased resilience to disruptions, and optimized resource allocations for greater efficiency. It allows agencies to proactively identify and mitigate potential failures, protect public funds, ensure effective use of resources, and maintain operational continuity during crises, ultimately strengthening public policy and operations. Training and communication in the government space boosts efficiency, public trust, and adaptation to change by enhancing employees' skills, fostering innovation, and improving collaboration. These initiatives lead to higher employee engagement, reduced turnover, better public service delivery, and stronger organizational culture. ensuring agencies can effectively serve the public and maintain public confidence. Okay, protecting information technology and sensitive data. So, are you protecting your information technology and sensitive data? When it comes to that, you want to make sure you're doing everything on this slide. First, implement strong access controls. This includes role-based access to systems and data and using multi-factor authentication for critical systems. Next, use encryption for data that's in transit as well as at rest. Regularly update and patch systems by making sure to apply security patches promptly to prevent exploitation and maintain an inventory of all hardware and software assets. You should also conduct security awareness training. Educating staff on phishing, social engineering, and data handling, as well as promoting a culture of cybersecurity vigilance, are key. Government agencies need to monitor and audit system activity. Using intrusion detection and prevention systems and logging and reviewing access and activity for anomalies will help you stay ahead of potential threats. It's important to establish incident response plans. Defining procedures for detecting, reporting, and responding to breaches and conducting regular tabletop exercises and simulations will ensure you are prepared. Make sure to limit the use of personal devices. Enforcing policies on bring your own device and using mobile device management solutions will help protect your data. Lastly, comply with regulatory standards. Aligning with frameworks like NIST, FISMA, and FedRAMP, and conducting regular compliance assessments and audits will ensure you meet all necessary requirements. Now, by following these strategies, you can enhance your cybersecurity posture and protect your organization's valuable information. So I'll turn it back over to Steve to wrap up with the ongoing management and monitoring of your internal controls.
Thanks, Melanie. Before I do so, I think one thing that's not on here that you should probably be considering is that when you're onboarding new IT systems or IT applications is have a robust procurement process and make sure your IT function, regardless of how big it is part of that due diligence process. A big risk, specifically as I see in universities, but it's really a big risk to everybody, is the shadow IT, which is IT applications that different departments use that haven't gone through procurement, haven't gone through the vetting, and it's very easy then to take those unintentionally take those applications, use them if it's higher ed, for example, in a classroom, do some research and have confidential data that then gets exposed. So we're seeing risk with shadow IT all over the place. So we're talking about the monitoring of internal controls. So what can you do? The theme of the day has been organizational defense mechanisms, internal controls and risk management. You should set out to do the things that make your organization more stable. You should set a strong tone at the top for your that motivates and encourages employees to do the responsible and ethical thing. You determine what the highest risks are that you face to make sure you mitigate the highest risks first. You take a look at your lines of defense and how you divide the responsibility for risk management. Should dust off and evaluate your policies and procedures, update them as needed, and share them across your organization. If you don't have them, create them, and don't be afraid to ask for help if you need it. Finally, for my internal audit friends on the call, don't forget about the third line of defense. Periodically review your internal controls by completing internal controls assessment. Melanie went through what the process was, evaluating the control design and operating effectiveness over items listed here and any one of a million different other things. You want to figure out how well you are safeguarding your assets and preventing fraud. How are you segregation of duties? What we do is we walk through each area, identify and evaluate the internal control effectiveness. We'll work with management to resolve any key internal control weaknesses. Then we summarize it all in a report, which essentially creates a punch list of actions that can be knocked out periodically by management, such as annual reviews of user access. As far as the presentation go, this would end it, but I do have one more thing I want to talk about. I added a slide at the end, hoping that we'd have a few extra minutes. So bear with me a second as I go through our thank you slides. So here's a real life example of what could happen with inadequate internal controls. I pulled this out of the news a couple days ago. Over a 4-year period, this individual took advantage of weak internal controls to embezzle over $100,000. It's not millions of dollars, but it's a great case study in showing what was lacking. There's some basic internal controls that would have prevented this. Number one, the lack of segregation of duties. One person, the perpetrator, had the ability to both initiate and execute money transfers without a second person's involvement. Melanie talked about that a couple minutes ago. There was inadequate bank account monitoring. There were repeated transfers to the perpetrator's personal bank account and large cash withdrawals that went unnoticed for years. There was poor access over restricted funds. The per capita funds account was not closely monitored, even though it was specifically intended for child care, which is a high-risk, sensitive purpose. They had a failure to remove access after termination. They weren't doing user access reviews, or in this case, they certainly didn't, because the perpetrator continued making fraudulent transfers after she was terminated. This indicates her access to the bank account remained active post-employment. And there's no periodic independent review. The fraud continued unchecked for 4 years, suggesting that there were no independent checks on account usage. Any one of these internal controls or accommodation thereof would have prevented it. There are dozens of other cases like this. What I do is I research them, do this analysis that I just did, and then go and work with my clients to help them build better systems of internal controls or evaluate the internal controls. I suggest that you do the same. You can do this, all of this internally. We're doing another, since we have another minute or two, we're doing another project where former CFO who had been gone for 6 or 8 months still had full super user admin access to their payroll portal. Nothing happened, fortunately. I don't even know if the CFO knew they still had access. I'm assuming they didn't, but it was something we found in doing a user access review. That CFO, had they been nefarious, could have been living in Bermuda now with a whole bunch of money. They're not. So then with that, that's going to end it. I certainly appreciate your time. We'll review the Q&A and respond directly to those of you who have questions. Thank you for your time and interest today. Don't forget to connect with us on LinkedIn if you're so inclined.
Thank you.
Thank you, everyone. Have a wonderful rest of your day.